Basically, if we take a look at the overview of cost components that are incorporated into a product cost, in other words, the cost of inventory, we know we incorporate manufacturing costs. And as they say here, these are costs that are part of the production process. Now, some manufacturing costs are very, very easy to identify with what we call cost objects, where we can assign cost directly to a particular, either it be just simply work in process or a product line or a job or so forth. It's easy. There are some costs where it's easy to do that, and those are primarily in what we call direct materials and direct labor. And the reason for that is these are materials that are directly incorporated into the product, therefore they're easy to identify with the cost object, and direct labor, which is labor where we're actually working on the cost object directly. So obviously that's going to be easy to identify. Now the area that is difficult to identify is overhead, and these are the costs that cannot be directly traced back to the production activity, but these overhead activities and costs in effect are essential to the production process. If we eliminate this activity for any number of reasons, production will eventually cease or will immediately cease rather. So the problem is, though, that we can't trace these directly back to the cost objects that we've established. So we need to come up with some type of methodology to do that. And the first methodology is what we call a predetermined overhead rate, or PDOR, where we go ahead and apply a predetermined overhead rate that would be applied to our, basically to what we call cost driver activity, which is theoretically the driver of that overhead cost, and then that could be applied back to a cost object. Now, there are three major methodologies of allocating overhead costs back to cost objects, and the first one is called the single plant-wide overhead rate, and this has been in American manufacturing the traditional methodology back in the late 1800s, early 1900s. Then we also have what we call departmental overhead rates, and then we have the more modern version of allocating overhead, which we call, the most popular is activity-based costing. Now we're going to take a look at overhead costs and allocating them from a plant-wide overhead rate. And in this case, we take all of our overhead costs and we pool that value together, and we determine a cost driver that is common to each product line. As an example, if product line A requires machine hours, product line B requires machine hours, and product line C requires machine hours, it may be best to allocate overhead based upon machine hours. The machine hours would be our cost driver for our overhead cost. So to determine the predetermined overhead rate, we take our total overhead cost, divide it by the cost driver, and then allocate it out based upon the amount of, in this case, machine hours each different product line would use. Now, an overhead driver, a single overhead rate, works well if you can basically find a common cost driver. Typically the most common cost driver is direct labor hours, simply because there's typically direct labor applied to each job. But you all have to be careful. When I say each job, I should say each job or product line, or if you will, cost object. But you have to be careful. But let's assume that product B has no direct has no direct labor hours whatsoever, and product line A and product line C do. So what would happen is that if we are using direct labor hours, we would be allocating overhead back to product line A and product line C, and product line B would in effect not have any overhead allocation, and that could cause a major distortion in our product costs. Now let's review how we determine a single plant-wide overhead rate. Now, step one, we need to estimate the total indirect cost for the plant for the accounting period. In other words, we need to come up with an estimate of what our overhead costs are going to be for the accounting period. In this case, we're picking the overhead amount of $3,600,000. And again, these are all of our overhead costs, and they're being thrown into, in effect, one cost pool that's going to be allocated out. Step number two then is we're going to determine the cost driver to apply to the entire facility. In this case, we're going to use direct labor hours, and what we're saying here is we're going to estimate the total number of units of the cost driver to be incurred for the entire plant. So what we see here is we're estimating that there's going to be 60,000 direct labor hours incurred for the entire manufacturing organization, and we're going to divide that into the $3,600,000 overhead cost pool. So then step 2C, we calculate the PDOR, the predetermined overhead rate, based upon our prior two steps. So in this case, when we do the calculation, what we're going to do is every time we encounter one of our cost objects encounters a direct labor hour, we're going to charge $60 of overhead to that particular cost object. Step 3 then is we're going to assign the cost to our cost objects based upon the cost driver activity relative to the cost objects. And here we're going to assume we have several product lines. In this case, it'll be product line A, product line B, and product line C. And what we're going to do then is we're going to assign our cost to the objects based upon the cost driver activity that is devoted to each of those product lines. And you'll see that each product line has direct labor hour activity. So in the case of product A, it's going to be 20,000 direct labor hours times $60. That's our predetermined overhead rate. We're going to allocate $1,200,000 worth of overhead to product A. Product B then, 30,000 direct labor hours times 60 equals $1,800,000. Product line C, 10,000 direct labor hours times 60 equals $600,000. So our total cost, our total overhead, it's going to come out to $3,600,000 based upon the fact that we had 60,000 direct labor hours at $60 per hour. So that's a simple example of how we'd allocate overhead back utilizing a single plant overhead rate. Now let's take a look at a single plant wide overhead rate exercise. And this is a situation where, let's go ahead and do the description over here on the right. I've tried to put everything I could on this slide, so it is rather crowded. This company called Waycool produces two different models of air conditioners, and the company produces the mechanical systems of those air conditioners, both of them, in their components department. The mechanical systems are then combined with the housing assembly in the Waycool's finishing department, and the support department supports the manufacturing process. Now what you can see here is you can see the individual departments, and I call them processes. Here you have components, you have finishing, and support. Now each of the basically each of the activities, the departmental overhead costs and the drivers associated with each activity cost are listed on the left. And we can see again each of our processes or departments, okay, have different types of activities, and we are accumulating the overhead costs for each of these types of activities. And in addition, we've established the cost driver that we believe best represents the allocation of that activity in that department. So you can see the different cost drivers. And again, those cost drivers are different depending upon what the activity is. And then I've listed over here under quantity the amount of activity that would occur under those cost drivers. For an example, if we take a look at the finishing department, we know there is a welding activity and the overhead costs associated with that are $180,300. And we feel that the correct or the most pertinent cost driver for welding would be the welding hours. There's going to be 3,000 welding hours for that activity. Inspecting 210,000, and again the cost driver would be the number of inspections, and we know there's 700 inspections in finishing. Rework would be 75,000, and that would be based upon the cost driver would be rework orders, and the quantity would be 300. So what I've done is I've set up basically the detail costs, overhead cost, and the detail cost drivers for these individual activities. However, in this case, we're going to ignore these individual cost drivers because we are going to create a single cost driver. And in this case, the company has selected machine hours as its single predetermined overhead rate cost driver. So based upon that, then we're going to use machine hours to allocate all of our pooled overhead costs back to our product lines. So in this case, it's asking determine the full cost per unit for air conditioning for models 145 and 212. So now the first thing we need to do is we need to calculate the overhead to be applied to production, and that's our cost objects, and our cost objects are going to be air conditioner model 145 and model 212. So calculate the overhead to be applied back to the production, the cost objects based upon the machine hours, which is our cost driver. And the calculation's fairly simple because we take the total amount of overhead for each department, no matter what the overhead is, whether it's changeover machining, setups, or so forth. But we take the total amounts from components, the total amount from finishing, and the total amount from support. We add them together, and then we divide that by our total machine hours, which would be 6,000 machine hours, which means our predetermined overhead rate would be $283.55 per machine hour. And you will notice that I've corrected this slide to include the brackets in the numerator side of the equation because that addition obviously has to be done first. So I apologize for that, but now that is corrected. So we still come up with the same result, predetermined overhead rate of $283.55 an hour. Now we're being asked to determine the total manufacturing cost per unit, in other words, per model unit for each product line if direct labor and direct material cost are $250 for model 145 and $180 for model 212. And again, these are all the metrics that we just took a look at in terms of the cost drivers: welding hours, batches, number of inspections, machine hours, setups, rework orders, and purchase orders. Now at the very top, I also show you how many models or how many units of these particular models were produced. So with this information now, I can go ahead and I can assign my overhead cost to each product line, each different model. So I'm going to take, since my cost driver is machine hours, I'm going to take my machine hours, which are 1,800 machine hours from model 145 and 4,200 machine hours from model 212. I'm going to multiply them times my predetermined overhead rate, which I calculated in my previous slide, and I can see the amount of overhead now that I've applied. $510,000 is going to be applied to 145, and $1,190,000 is going to be applied to model 212. Now we're going to take that, we're going to compute the overhead cost per unit produced. So it's a matter of it's a matter of taking our total overhead applied to each product line and then dividing it by the amounts of units produced. Now when I provided this to you in my classroom demonstration, I had accidentally used machine hours instead of units. What I've done is, in this particular video example, I've corrected this so the actual units produced of 1,500 and 3,500 are utilized instead of me inserting the machine hours. That means that if we take those total amounts and divide it by the units produced for each model, we're going to come up with an overhead rate of $340.26 for both models, 145 and 212. And that makes sense because we're using a single allocation rate. Now what I'm going to do is I'm going to allocate my materials and labor cost, which was given to me up in the problem explanation, to model 145 and 212. And you can see the costs that were allocated to models 145 and 212. Now to that then I'm going to add my indirect cost, or in effect my overhead cost, and those are going to come out to $340.26 per unit. So if I look at the cost per unit when I produce those units, it's going to come out to $590.26 for model 145 and $520.26 for model 212. Okay, requirement 3 says assume the market price for model 145 is $820. That's obviously the more expensive of the two models. And the market price for model 212 is $480. Determine the profit or loss per unit for each model. So again, I'm taking the cost per unit from the previous slide, the cost per unit that I have calculated. Now I'm going to take the price that we could sell these units for, respectively, and I'm going to subtract out the total cost per unit, which I just got again from the slide. And I end up with a profit. I'm earning $229.74 on each model 145, but on model 212 I'm actually losing $40.26. And in theory, this may lead me to make some type of conclusion that I need to reprice model 212. Again, we have to look at the market implications. Can we raise the price? Can we be competitive, or so forth? Or I need to find a way to reduce the cost per unit. Or I could very drastically simply cut model 212 and say I'm no longer going to produce it, but that causes other issues. Now, that's an example then using a single plant-wide overhead exercise. Let's now go on to that second category in terms of allocating overhead. And this is allocating overhead at the departmental level. And overhead costs are allocated by department under this process. Overhead is applied to work in process cost objects by charging the operating cost of indirect departments to production or indirect cost to production departments based upon the cost objects use of the indirect departmental services. Now I say the cost objects use. It may not necessarily be that. It's basically how management decides they need to allocate those cost, the cost, and therefore the cost drivers to the cost objects. Now again, if we take a look at the pictorial of how this works, again, overhead costs are pooled, but overhead costs are basically pooled by departments. Here we have pool A, cost pool A, and cost pool B, and these are separate departments. What we're going to then establish is a predetermined overhead rate for each department, and again, our cost pool will be driven by some form of cost driver that has been established for pool A by management, and some type of cost driver that is established for pool B by management. So we're going to take our total cost pool, divide it by our cost driver, our estimated cost pool divided by our estimated cost driver, and we're going to come up with a predetermined overhead rate. Now, based upon the activity of that cost driver either consumed or assigned to product A or product B, we're going to allocate different amounts of overhead from cost pool A based upon that predetermined overhead rate. And we're going to do the same thing for cost pool B. Now let's go ahead and see a simple example of how we allocate a departmental overhead rate. In step one, we want to identify and estimate the total indirect costs for each department for the accounting period. Now in this case, the company has total overhead, total company overhead of $2,400,000, and $1,600,000 is basically is located in Department 1 in that cost pool, and $800,000 is accumulated in the Department number 2 cost pool. Now step number 2A, we determine the cost drivers to apply to each department. In this case, in Department 1, we've decided that machine hours would be the most meaningful relationship between assigning the cost from Department 1 and our cost objects. Department 2, the same thing, but in this case it's going to be direct labor hours. So what we see in this case is that we don't need to use the same cost driver because we're no longer using a single overhead rate. We're using departmental type of cost drivers. Okay, now step 2B, estimate the total number of units of the cost driver to be incurred for each department. So I take the $1,600,000 worth of overhead costs under Department 1, and I estimate there's going to be 40,000 machine hours that are going to be allocable back to my individual products. I also see that I'm going to have in Department 2, it's going to be $800,000 of my cost pool divided by 80,000 direct labor hours. And again, those machine hours and direct labor hours are estimates of management's estimates. Then we're going to go to 2C, and now we're going to calculate the predetermined overhead rate based upon our prior two steps. And in this case, we're going to see that when we do our division of the 1,600,000 divided by 40,000 machine hours, we're going to come up with the predetermined overhead rate out of Department 1 of $40 per machine hour. In the case of Department 2, we're coming up with $800,000 total cost pool divided by 80,000 direct labor hours. So our overhead allocation out of Department 2 is based upon direct labor hour at $10 per direct labor hour. Now we're going to assign our overhead cost to the cost objects, which again are going to be product lines. In this case, we're going to look at product A first, based upon our cost driver activity. So Department 1, basically product A used 30,000 machine hours. Therefore, 30,000 machine hours times $40 per machine hour means we're going to allocate from Department 1 $1,200,000 worth of overhead activity or overhead cost. Department 2, then we use 10,000 direct labor hours and times $10, so we're going to end up being allocated out of Department 2 $100,000 worth of overhead activity. So the total amount of overhead allocated now to product A will be $1,300,000. Okay, now we're going to take a look at product B. And product B, again, we're going to go through the same process. In the case of product B, Department 1, product B only used 10,000 hours of machining hours, so times 40. That means we're going to allocate $400,000 to product B. Department 2, $70,000 of direct labor hours at $10 an hour equals $700,000. So the total amount then overhead allocated to product line B is $1,100,000. Now I've had students when I do this demonstration ask me, well, what about product line C? Because I use that in one of my other examples. Okay, as far as we're concerned right now, I just had enough room to put in product line A and B, so I'm just using those as the total example. But you'll notice the difference in allocation based upon the fact you can see product line A incurred a lot more machine hours and not that many direct labor hours. In product line B, they didn't incur too many machine hours, but they incurred a lot of direct labor hours. So the charges are going to be different. And now what we can see is we can do a reconciliations of our costs, because we know product A we're going to charge $1,300,000 worth of overhead to product A and $1,100,000 worth of overhead to product line B. When we take and add these two together, that adds back to the total overhead that we've allocated. So that's a very simple example of how we can use different departmental overhead rates. And again, those different departmental overhead rates can be based upon the fact they're separate cost pools, and we can use different cost drivers as opposed to a single overhead rate where we have a single overhead cost pool and a single overhead cost driver. Now let's go ahead and use WayCool again with all the exact same information. And again, it has all the same information in terms of the company produces their mechanical systems in their components department. The mechanical systems are combined with the housing assembly in its finishing department, and the source support department supports the manufacturing process. Now again, all the information regarding each process, each department/process is included in here with the activity, the overhead costs associated with those activities, the cost drivers associated with each of those activities, and the quantity of the cost drivers. Now in this case, the question is being asked, determine departmental overhead rates and compute the overhead cost per unit for each product line. Management has decided to use the following cost drivers to assign overhead costs to each department. Components are going to be machine hours. Finishing is going to be welding hours, and support is going to be through purchase orders. Okay, now when we take a look at components, we take a look at the total departmental cost, which overhead costs, which is $1,004,000. We're going to divide it by the number of machine hours, because that's what management has established as a cost driver for components. So we're going to take 6,000 machine hours divided into the $1,004,000, and we're going to come up with a cost driver per machine hour of $167.33 per machine hour. Okay, in terms of finishing, we had $465,300 worth of overhead cost. And again, we set up welding hours as our cost driver. So we divide the $465,300 by our welding hours of 3,000, and that comes out to $155.10 per welding hours. Support then, our total overhead costs are going to be $282,000. That's our cost pool, and we're going to divide that in this case by our cost driver going to be purchase orders. So it's going to be $232,000 divided by 450 purchase orders. So the cost per our cost driver being the purchase order is going to be $515.56. Now we're going to go on and determined basically compute total overhead cost assigned to each of these air conditioning models, and then the overhead cost per model. And again, on the left hand side you can see where I've in terms of the total amount of cost driver units, this is exactly the same from the previous example where we did strictly our overhead rates. And what I've done is I've repeated from the previous slide our PDOR per our process, or if you will, per our department. Okay, so now I'm going to compute the overhead costs assigned to each model. And model 145, if you take a look at it this way, it used 1,800 machine hours. So I take 1,800 machine hours times $167.33. So I'm going to allocate $301,194 to of overhead from components to model 145. I also have 800 hours of welding hours, and again my welding hours are within finishing are $155.10, and model number 145 used 800 hours, so the total overhead allocated is $124,080. Thirdly, I'm going to take the overhead that comes out of my purchase order, and my purchase order cost driver came out to $515 $3.56 per purchase order, and the number of purchase orders that were issued for model 145 were 300. So I take 300 purchase orders times $515.56, and that results in an overhead allocation from support for $154,668. So the total amount of overhead basically that would be applied to model 145 would be a total of $579,942. Now I'm going to go through the same process for model 212, and again I'm going to take in this case model 212 machine hours 4,200. In the case of my finishing department, it's based upon welding hours, which will be in this case 2,200, and 150 purchase orders under my support. So I multiply all those by their predetermined overhead rate predetermined overhead rate per their process, and I'm going to come up to a total overhead applied to model 212 of $1,121,340. So now I have all the overhead allocated back to each of my product lines. Now I'm going to calculate the overhead per unit based upon the number of units produced. In model 145, the total amount of overhead was $579,942. I divide that by the number of model 145 units produced, which are 1,500 units. So the cost per unit in terms of overhead is $386.63. In the case of model 212, I'm going to take $1,121,340, and I'm going to divide it by the number of units produced for model 212, which would be 3,500, and that's going to come up to total overhead allocated per unit of $320.38. Now, number 3, determine the total cost per unit for each product line. And we're given if the direct labor and direct materials per unit are $250 for model 145 and 180, and then the overhead cost per unit from the previous slide that was $386.63 and $320.38 for model 145 and 212 respectively. So what I'm going to do is I take model 145, and according to my description, my materials and labor are $250. I add that to the $386.63 worth of overhead per unit that I am also given in this problem that I calculated from the previous slide, and my total cost per unit comes out to $636.63. I do that for model 212. Again, model 212, the cost, the material and labor cost is $180 for model 212, and my overhead cost per unit is $320.38. So when I add these costs up, the cost for model 145 is, which includes materials, labor, and now overhead, the total cost to produce model 145 is $636.63, and model 212 the cost is $500.38. Now again, I'm assuming now that the market price for model 145 is $820 and model 212 is $480, just like I did in my previous example using the same data. So I'm going to now determine what my profit or loss is every time I produce and sell a unit. My market price is $820. My cost per unit is $636.63. Therefore, my profit is going to be $183.37. Model 212, my selling price is $480 per unit. I'm going to subtract out my price per unit of $500.38, and in this case my loss is $20.38. You'll remember from our first exercise where we used the exact same data. When we used a single overhead rate, our loss was approximately $40 a unit, and now using departmental overhead allocations, the profit on model 145 went down a bit, but the amount that I lose per model 212 actually was cut in half. So now we're seeing a little bit different story regarding the profit and loss between model 145 and 212. Now let's go on to the third methodology of allocating overhead, and it's called activity-based costing, or a lot of times it's called ABC. In this case, overhead costs are assigned to a cost object based upon the amount of the activity, and again, not necessarily departments, but simply an activity that the cost object consumes. In other words, what the philosophy is basically, if a cost object consumes an activity, it should have to pay for that, but it shouldn't have to pay for an activity it doesn't consume. Okay, activities are those indirect resources that are essential to the production process. Now let's go ahead and kind of take a look at a pictorial of an ABC process. Number one, we need to identify overhead activities and their associated cost. In a lot of cases, this means we identify the activity and not necessarily the department, although the department may be the activity. But we may look at the individual activities, and we may basically create those activities, and instead of accounting for them via the department, we will account for them via those associated costs in an activity cost pool. Okay, and this is what I'm saying here is number two then is we create cost pools and assign the activity costs the individual cost pools. So again, the cost pool could be a welding cost pool instead of the finishing department. And it could be individual cost pools within that different department based upon the activities, or the activities may go across a number of departments, but they're still going to be pooled in that activity cost pool. So here you see where we're creating three activities: activity 1 cost pool, 2, and 3. Now based upon that then, based upon those individual cost pools, in theory it should actually be easier to come up with the cost driver, because when you're creating these cost pools at the same time, you're determining what are the direct activities that would directly link those cost pools to a cost object. So what we want to do then is we want to determine the relevant cost driver for each activity cost pool, apply the cost driver units to the cost pools to arrive basically at a predetermined activity rate. After that then, we're going to go ahead and, based upon the activities that are being used, we're going to assign costs to, and when I say costs being used, the activities being used, it's the activities that are being used by the actual cost objects. In this particular case, we see product A is using activities, is using an activity from activity 1. Product A is also using an activity from activity 2, if we follow it, and product A is using from an activity from activity 3. So product A is paying for the activities that it's using. Product B is using, again, activities from activity 1. Product B is also using activities from activity 2, and product B is also using activities from product 3. But again, if the product is not using the activity, that product line should not be paying for that activity. It should be paid for. If that activity has to exist, it should be being paid for by the product or the cost objects that are actually using that activity. If you think about it, under both our single cost method and our departmental cost method, in some cases you can see where some cost objects may be paying for activities they don't even necessarily use. Okay, now let's go on and take a look at this example on activity-based costing. And here we see a company called CART Company, or CARTCO, and I believe this example, I believe it uses like go-karts or something, models of go-karts. But anyhow, here's a listing of overhead activities, and here we see total overhead. And these are the activities that produce the overhead. We have machine setups, machine repair, factory maintenance, engineering salaries, and so forth. And we have classified them as indirect labor and factory utilities, but these all enter into be basically factory overhead. So now what we're going to do, step 2, we've identified all our, let me go back just one second. We've basically identified all our overhead activities and their associated costs. So now what we're going to do is we're going to create cost pools and assign activity costs to each of the cost pools. Now, in this case, this company has decided to establish 4 major cost pools, and one is called craftsmanship, the other is setup, the next one is design modification, and the next one after that is plant services. So what we're going to do is we're going to classify the overhead activities under those cost pools. So now, again, we take a look. This is the amount that we had from our previous slide. So we're going to classify each of these. And under craftsmanship, we're going to have assembly line power. And the activity cost is going to be $600,000 under craftsmanship. And that could be where, again, where the people making these products are the craftsmen, and they're using all the power tools and things like that. I'm just coming up with a kind of a creative explanation. Okay, in setup, we establish then machine setup cost $700,000 and machine repair of $1,300,000. So the total pooled cost is going to be equal to $2 million for setup. Design modification, then, we're going to classify engineer salaries of $1,200,000. So again, that's going to be our pooled cost. Plant services, we're going to include our factory maintenance of $800,000 and our heating and lighting of $200,000. So our total pooled cost is $1 million. So now we have total overhead costs of $4,800,000, and our total cost, of course, our total overhead is $4,800,000. Now, at this time, students say, well, you know, would we have to set them up under these activity pools? No, the answer is absolutely not. It's whatever you feel should be correct. As a matter of fact, you could basically set each of these items up as separate activity pools and then come up with individual cost drivers for each of these pools. So again, it's up to management to decide what is the most meaningful way of allocating those costs. Now I'm going to skip this because this is an exercise that we would have done in class, because it's a matter of, again, looking at cost drivers in terms of resources, the resource consumed, and the cost driver that would be basically best work at that. Now step 3, determine the relevant cost driver for each activity cost pool and apply the cost driver units to cost pools to arrive at a predetermined activity rate. So in this case, we have to consider, again, these are our separate cost pools: craftsmanship, setup, design modification, and plant services. And again, that came from our previous slide. Now we have to determine what would be the most appropriate activity driver that would actually drive these particular costs. Now in this case, we're going to say that direct labor hours for craftsmanship would be the best way to assign the cost pool to my activity. And in this case, my expected activity level is going to be 30,000 direct labor hours for the company. So my activity rate is going to be $20 per direct labor hour. Setup, it's going to be by batches. That's my activity for setup. And again, my overhead costs to be assigned are $2 million. So I have to now determine my expected activity level, which would be 200 batches. So I take the 200 batches, I divide it into my overhead cost pool of $2 million, and that means my activity rate is $10,000 per batch. Now I go on to design modification, and the cost driver in this case is the number of designs that have been created. In this case, my cost pool is $1,200,000. My expected activity is I'm going to do 10 designs. So I take the 10 designs divided into $1,200,000, my expected dollar in my cost pool, and it's going to come out to $120,000 per design. Next then, plant services. My activity that I have chosen, or management has chosen in this case, is square footage. And I have $1 million worth of cost in the cost pool, estimated cost to assign. My square footage is 20,000 square feet divided into the $1 million cost pool for plant services. And I come up with an activity rate of $50 per square foot. Now, what we can do is we can see basically this company makes two types of go-karts. It makes standard go-karts and custom go-karts, and so we're going to allocate those amongst the two product lines. What I've done here in this upper right hand corner is I've basically posted all the activity rates for each of the cost pools just from the previous slide. Now, under craftsmanship, standard go-karts we estimate to consume 25,000 direct labor hours. The activity rate is $20 per direct labor hour, so the activity cost allocated is $500,000 to standard go-karts. Okay, in the case of custom go-karts, it's going to be 5,000 direct labor hours. Again, $20 per direct labor hour. That's our cost driver rate. So our activity cost allocated to custom go-karts is $100,000 overhead activity. Setups. Okay, in the case of standard go-karts, we're estimating 40 batches. And again, our activity rate is $10,000 per batch. So the activity cost allocated, again, the overhead cost allocated under setups to standard carts will be $400,000. And in the case of our custom go-karts, it's going to be 160 batches times $10,000 per batch, and that would be $1,600,000. Okay, then design modification. In the case of our standard go-karts, there are 0 designs modified. So actually the standard go-karts doesn't even use that particular service. So we don't allocate any of that cost. But the custom go-karts do use the designs, and we estimate there's going to be 10 different design modifications at $120,000 per. That should be design. So the total cost is going to be $1,200,000. And then plant services, we use 12,000 square feet of space for standard go-karts at $50 a square foot, and it's going to come out to basically the $600,000, and 8,000 square feet for our custom carts, $50 per square foot, so we end up with $400,000. So based upon activities consumed out of these particular out of these particular activity pools, we've allocated $1,500,000 of overhead cost to our standard go-karts, and we see that actually we've allocated a lot more overhead costs, $3,300,000, to our custom carts based upon the unique thing, the uniqueness that these custom carts have to go through a fairly expensive design process that the standard carts normally don't have to go through. So as you can see here, there's a significant difference between the amount of overhead being consumed by the standard carts versus the custom go-karts. And if you allocated this based upon a single overhead rate, these activities would be more equal to each other, and we'd really be making a very, very bad pricing problem, because we'd probably be penalizing standard go-karts for the amount of activities they didn't use and giving the custom go-karts a bonus, because that's because custom go-karts, part of that cost is being absorbed, that custom activity cost is being absorbed by the standard product line. So now let's go ahead and take a look at our standard example that we've used for both our single overhead rate and now our departmental overhead rate. We're going to use exactly the same information, but now we're going to calculate this based upon activity-based costing. So again, all the information you see here is from our previous examples, exactly the same numbers, exactly the same cost drivers and quantities. And again, in terms of model 145, exactly the number of units produced. And again, all the additional cost drivers that are split between model 145 and 212. Now we're going to take a look at the components. And what we're going to do in this case is we're going to basically take a look at changeover, and the changeover under components has a $500,000 overhead cost. Now we're expecting to have an activity level of 800 units, the number of batches. Our activity cost driver is going to be the number of batches. So that means that we're going to allocate we're going to basically take the $500,000 divided by the $800 worth of our expected activity. So our rate is going to be $625 a batch, which means every time we produce a batch for model 145, it'll cost $625. When we produce a batch for model 212, it'll cost $625. So each model number will be paying for that activity. Okay, we're going to go on then in components, and we're going to go to machining. Machining, our total costs are $279,000. Our expected activity is machine hours, 6,000. So 6,000 divided by $279,000 means our rate, our cost driver rate per machine hour, our activity rate will be $46.50 per machine hour. So again, every time model 145 uses a machine hour, it's going to charge $46.50. Model 212, when it uses a machine hour, it's going to be charged $46.50. Again, it's paying for the activity used. The next component then would be setups, $225,000. And the cost driver is the number of setups, and we expect 120 setups. So in this case, we take $225,000 divided by the number of expected setups, and it's going to come up to $1,875 per setup. Now when we take a look at this, we can go ahead and assign our overhead cost based upon the amount of activity each of these models we're planning to use with each of these models. Now in this case, we can see model 145 in terms of the number of batches. We can see model 145 is we're planning to use 400 batches of activity. So 400 batches of activity times our activity rate of $625 means we're going to assign $250,000 of cost based upon that activity consumed. Okay, now we move on, and model 145, we expect it to consume 1,800 machine hours for model 145. So there's a 1,800 machine hours for 145 times $46.50. So the overhead assigned equals $83,700. Okay, we're going to do setups now for model 145, and in this case it's going to be, we assume there's going to be 60 setups. So 60 setups times $1,875 a setup means we're going to allocate overhead of $112,500. So the total overhead applied from components will be, for model 145, will be $446,200. Okay, we're also going to do this for model 212. Again, from changeover, the number of batches used, the number of machine hours used, and the number of setups used. And in this case, we're going to be allocating overhead to model 212 in the amount of $557,800. Now we're going to go through the same process again, but we're going to come through that process. We're going to do it for finishing. And again, finishing, we take a look at welding. It's $180,300. That's our expected cost. We're going to use our cost driver being welding hours, and our activity is going to be our expected activity is going to be 3,000 hours. So we take the $180,300 divided by 3,000 hours, And our activity rate is going to be $60.10 per welding hour. Inspecting then $210,000 divided by my number of inspections, which is a cost driver, and the expected activity is going to be 700. So 210,000 divided by 700 comes out to $300 per inspection. Finishing, my rework order is going to be, or my rework is $75,000. My expected activity is 300 based upon the cost driver of rework orders. So my the cost per rework order is going to be $250. So now I'm going to assign my finishing overhead cost to model 145 and 212. And again, it's the same process I went through the previous slide. In the case of model 145, I have 800 welding hours to model 145. So 800 hours times $60.10 means the overhead assigned is $48,080. I go on to inspections and I take a look for inspections. Model 145 is expected to have 400 inspections. 400 inspections times $300 per inspection equals $120,000. And lastly, rework orders. I expect to have 160 rework orders equals $40,000. 160 rework orders times $250 activity rate per work order, rework order, is $40,000. We're going to do the same. We're going to go through the same process for model now number 212, and again based upon the activities that it plans to consume. In this case, welding hours 2,200 times our activity rate of $60.10 equals $132,220. We're going to go that also going through the activities for inspecting and also the activity for rework orders, and the total in this case comes up to $257,220. So now we have the overhead assigned to models 145 and 212 and 212 from our finishing department. Okay, the next slide we go to is the support department. And in this case, again, we're going to take the individual activities within the support department divided by their cost drivers and come up with an activity rate. So in the case of purchasing, the overhead cost is $135. And that our driver is number of purchase orders. Our expected activity rate is 450. So the activity rate per PO is $300. In the case of provide space, it's $32,000. Again, our cost driver is the number of units. Therefore, we have 5,000 units. 32,000 divided by the 5,000 expected activity units means that our space is at $6.40. Providing utilities then would be, again, expected cost would be $65,000 divided by our expected level of activity, the number of units of 5,000, and in this case it's going to be $13 of activity. Now model 145, again, we're going to take in model 145 the number of purchase orders was 300 purchase orders times the $300 activity rate. So the amount of overhead we're going to have assigned to model 145 is $90,000 for purchasing under support. Number two, then, providing space. We have space of, space, and it's based upon the number of units produced. And in this case, the number of units produced is going to be 1,500 here at the top. Sorry, my pointer isn't working. 1,500 at the top. So it's 1,500 times $6.40 a unit. So the total amount assigned would be $9,600. I did forget to mention when I talked about dividing by the number of units or units, that was the units produced in terms of the air conditioners. Now also then we're going to do in providing utilities, and again our activity driver is still units 1,500, but our activity is going to be at $13 a unit, so the total overhead assigned is $19,500. So our total overhead from support will be applied to model 145 at $119,100. Also, now we're going to do that for model 212 again, based upon the activities used for each of these particular depending upon the activity units used for each of these activities. And again, we're going to go through each of those for purchasing, providing space, and providing utilities. And the total overhead for model 212 is 112,000. I know it's cut off over there a bit, $112,900. Okay, now that we've basically assigned the overhead from each of the individual departments based upon individual cost drivers and the individual activities for each of those cost drivers, we can take a look at the overhead cost assigned to model 145 and the overhead cost assigned to model 212. So now we know the cost applied to both product lines. Now if we take a look at the amount of units produced for model 145, the cost per unit for model 145 is now $515.59. Model number 212, the cost per unit is $265.12. Now, number 2, determine the total cost per unit for each product line if we direct labor and direct materials, again, was in the amount of $250 for model 145 and $180 for model 212, just like our previous examples. So in this case, so I'm having some trouble with my I'm having a user problem with my mouse, meaning me. Okay, so we add model 145, the direct materials and direct labor is $250. To that, then, we add our overhead cost per unit of $515.59. So the total cost to produce, basically, to produce the unit would be $765.59. And in the case of model 212, it's going to be $180 of direct labor and materials plus our overhead cost at $265.12 means that our total cost per unit is going to be $445.12. Now we're going to assume the market price for model 145 is $820 and model 212 is $480, exactly the same model that we had before, or exactly the same data that we had before in our previous example. So model 145, the sales price per unit is $820. From that, we subtract our cost per unit of $765. And unfortunately, this slide in my presentation has slipped, but the net profit now for model 145, if you can see it, I think you can see part of it at least, is $54.41, which is considerably different than the example under my single department overhead allocation and my single rate overhead allocation and my departmental overhead allocation. Now I take a look at model 212. The sales price is $480 and less my cost per unit is $445.12. And instead of the losses that were produced under my other two methodologies of my single overhead rate and my departmental allocations, I'm actually showing that I make a profit of $34.88. So what you can see is that I made a fairly significant profit on model 145 using single departmental single departmental rate or departmental allocation. But when I then cost it out based upon activity-based costing, based upon the activities used by model 145, the net profit now goes down to $54.41. On the other hand, model 212, which produced losses under those two previous methods, under activity-based costing, based upon the activities model 212 uses, model 212 makes a profit of $34.88. Now, based upon that, then, you being management, it's up to you as management to determine what you truly believe. Is it the reality under the single rate? Is it the reality under the departmental overhead rate, or is it a reality under activity-based costing, resources consumed. But anyhow, that's a demonstration of activity-based costing, and that is it for today. So thank you for your time.